Good evening. Ira Epstein, and here we are with your financial market wrap-up for President's Day, Monday, the 17th of February, 2025, just around 6:30 p.m. Central Time. I don't want to get into a lot of politics because it turns people off that watch this, and I get it. But you got to pay attention to some because it's going to impact the markets. A great example. What's Europe going to do? They held emergency meetings today. I want to use the word emergency meetings because the Trump administration has threatened to cut them out first. They're not involved at this point with the Russia-U.S. talks. They're going to kick in tomorrow about trying to find common ground to give Russia an off-ramp in the war. I'd expect that Russia's going to come to this and say, we're not giving up land, we're not giving up anything. That's how you come to a negotiation. They know that. So Lavrov said that. Doesn't mean a damn thing. It just means that they're coming in saying, no, but let's talk and help us find a way to end this thing. And the way to do it, somebody's going to give up a little bit of this, another person's going to give up a little bit of that, blah, blah, blah. If they can't find a common ground, then the U.S. gives a lot of armaments to Ukraine, and the game switches on to Russia. They know that. We don't have to say it, but it'll be said behind those doors or implied. And what is going on with the panic in Europe? Because the U.S. has said, hey, we are tired. We, the United States, you guys don't meet your 3% of GDP goals. You drag your feet. You find all the reasons. We're tired. We want to pull back. And now that changes what NATO's all about. Doesn't mean we're pulling out of NATO. It means we don't want to fund it the way that we were funding it and forget the idea that our pocketbook's just open to you. That's really what it is. You're going to read about court cases. They're challenging Doge. We'll find out. They ran today. Today's President's Day. Courts aren't open on President's Day, not federal courts. There was a hearing today, and 13 state attorney generals took the Trump administration to court. We will see if they win. My guess is they won't. It's very difficult for a federal court to take powers away from a president. It's one thing to say we're going to stay in order, another thing to overrule it. It'll be challenged. Judges don't want to be challenged. They don't want to see their rulings overturned either. In the stock market, sitting here up and trying to figure out, well, what do we do next? Gold has been higher most of the day. Now, remember, a lot of the markets traded today. You had the stock indices, the metal markets, the currency markets traded today. The futures and bonds and notes traded. The U.S. stock markets were closed. The cash treasury bills and T-note markets and so on, all those were closed. You were open in all the energy markets as well. Grains never opened, the meats never opened, and the soft commodities didn't trade today. Got it? So we're going to see all that tomorrow. When we look at the S&P, you can see how the market is marching time, and it's just hanging here on a closing basis. Now, I want you, this should show up. I made it very light colored. What you have is a market that's coming in and narrowing in. And as you get to the apex, what normally happens on this formation, is the bottom pushes out and the markets often break out to the upside. We'll see if that's going to be the case here or not. But that's what that typically does. And the word is typically. Chart formations are not 100%. They're formations. But that to me is still a bullish formation. When I look at the chart action, I see higher lows, higher highs. Bullish. That is the definition of an uptrend. The market is trading over the 18-day average of closes. That gives the bias, as I define it, up. The market is, next resistance is the upper Bldr band, 61, 62 and a half. Bldr bands understand the nature and what they're created for. Markets trade within them 95% of the time. The 5% they're out of them, you push the band. The narrower the band gets, the easier it is to push out. But bands that are wide, when they swing down like they do, they generally don't stay under that for very long. They can ride the upper band. I wish I had a better one to show you here. Might have one in the currencies, but you haven't had that pattern where it's just ridden the band, what we call the gorilla glue pattern. And you're overbought. Overbought market, approaching resistance, potential breakout point into it. That's how I'd sum up the chart. In the NASDAQ, you can see here what's going on. Let's take off for the sake of discussion Tuesday and go to Friday. Both numbers were over 80, not over 80, not over 80 on Thursday. Now you'll say, what happened to Monday? Because it was abbreviated trading sessions, the exchange counts Monday and Tuesday as one trading session because of the abbreviation. And that's what they're doing at this point in time. When we take a look at the micro Dow Jones, it's about as neutral as you can get. Stuck at the 18-day average, taking out volatility, scraping together the Bollinger Band, pushing it together like that. And eventually, you break out of that. You're not at that point. It could, but it's not there at this point. In the Russell, still resistance and high interest rates are the enemy of this market. Over the past week, each time it has got up to the red line, the 18-week average, a day average of closes, it has failed and fallen back towards Bollinger Bands, bounced again, not really going anywhere and not trending. You have a lower and low and a higher high. I don't see a darn thing on that. When we take a look at the notes, be it short-term, long-term, it is similar in the sense that you have higher highs, lower lows, and you're caught in sideways action. Same thing here. Caught in the sideways action of the Bollinger Bands, just drifting around. Market's not ready to make a move apparently yet. Now, the dollar index has come down to the lower band. It could from here sink all the way to the 105.88 level. It could stop at any point. It's already in oversold. It's not embedded territory. And so far, there's two ways I'm looking at it. I can get new price counts to the downside. I mentioned that the other day. And I have old existing count to the upside. You got up to the third count of 109.83. If you remember, I did the special dollar report. That was my third objective. You got there and the market stopped literally within 10 points or so of that number and has now slipped back from there about 300 and some odd points, 330 points or so. Okay, what are we though? And that's what the market's trying to figure out. I cannot tell you what this is. It hasn't set it up yet. So trying to make something out of nothing is difficult. The rally in the eurocurrency, well, their problem is going to be very simple. They got to come up with a lot of money. Forget their regular budget. How are they going to get all the monies together, these individual countries, to pay their fair share of NATO that are NATO members? They've got to figure something out. Do they float euro bonds? They could. They've got to find out a financing scheme to come up with $2 trillion and do it fairly fast. The good news is they've also got to figure out how to stop fighting each other on armaments. Let France make these bullets. Let this do that. Let that do that and grow as a group to what they're doing. That could be very interesting too. There's opportunity where there's these problems. We'll see if they can take advantage. In the British pound, the market's riding the upper band higher. Could this market go into the 127 zone? It could. The market's coming up because Bailey is saying all kinds of things, questioning, well, should we really be cutting again? Remember, a couple of members went for 50 basis point cuts the next time around, and now you're hearing more and more, hold on, folks, maybe we got to take a look. What are these tax changes going to do? Where are we? You're hearing that noise. It's early. It's early. Don't worry about that. You don't have trends yet there. The best trending markets of commodities are currencies. You let them set them up. They're not there. In the Bitcoin, higher high, lower and low pattern. How many times have I said that tonight? And that's the patterns you have. In the crude, the interesting thing is you have higher lows, higher highs, an uptrend, but you're staying under the 18-day average of closes and underneath now the 100. So the bias is down, the trend is up, momentum is flat. Which way? If you clear 75.44 and stay above it, it'll be an attempt at a breakout to the upside. It would probably, to me, mean that things are not going well at all between the U.S. and Russia. If things go well, I look for the market to break down because then more Russian oil eventually comes to the market. When we look at WTI, which is our American grade, well, you've got lower highs, you've got higher lows. I don't know what to do with that. I guess if you cleared the 7160 level and close over that, I'd have the same type of breakout to the upside looking through here. Obviously, the WTI has a relationship to the Brent, and we'll see what they do together. In the heating oil, the market is trying to stay what? Well, follow. You have higher lows, right? But you also have lower highs. You don't have a trend. And if you get over this high, you're right into the Bldr band. If you get under this low, you're almost into the Bldr band. I'll let somebody else want to trade that. I don't see enough game there. I warned you that what happens when you get these cold vortexes, pros, no, you start fading them before they hit. And the reason is they're often short-lived in February. This is in January. This is February. More sunlight, more so on. So in Chicago, we're 3 degrees right now. That's without wind chill, by the way. At nighttime, we'll be 10 below zero without the wind chill. We'll be like this for 2-3 days, and then it suddenly changes. And in a week or so, we'll probably be 40, 45 degrees. In March, remember, we often get up into the high 60s. You're coming to the end. So just pay attention to what is going on there. I think the pros came out of their long positions, and that's the rationale that I have on that. You know, not only do I write on my newsletters, which you can get now, let me explain this. Normally, I allow in the course of not a calendar year, but within a year, you get a free trial if you want my newsletter, and after that, you're not getting it again for a minimum of a year. Well, I've broken that, and I said, if you want to get it again for 2 weeks right now, you can get it all through tomorrow. After tomorrow, it's back to, if you had it in the past 365 days, you're not getting another trial to it. So give yourself a free offer by signing up for it. And you can sign up for any of our other research on here. You just click away, and Ira Epstein free offers will set you up with everything, and away you go with it. We send you everything by email, and hook on. This is an exciting time. This is going to be an interesting time. You have a lot of markets that are waffling like that. You're going to come out of that. My guess is you'll come out of that in this 2-week period. I think you want to take a look, and that's how I've timed everything. Go to iraepstein.com, free offers. There's also going to be an icon at the top if you're on a PC. Sign up for what you want. We'll get you hooked up right away. I'm Ira. You have yourself a great evening. I'll catch up with you first thing in the morning in our morning videos. Take care.